In today's video, I am going to be breaking down some of the highest paying dividend stocks in Warren Buffett's portfolio. Warren Buffett is obviously one of the richest people in the world, and he's one of the, actually easily the richest investor in the world as well. So let's get down, let's check out his portfolio and see how he basically runs his money. So one of the top dividend payers in his portfolio is Store Capital Corporation, STOR, currently trading at $35.07 a share at the time of making this video. The dividend is 4.39%, which is pretty darn good considering that I am a Canadian and we always look at American stocks as being not high dividend paying stocks, usually in most cases. This is actually quite good in my opinion, and the PE ratio versus others in the same sectors, not that bad either. It does obviously have a little bit of a premium over some of the other companies. However, it's probably because Warren Buffett invests in them. And their average volume is a little over 1 million shares traded per day, so it's really easy to get in and out of it. Next is the 5-year chart, and it's quite interesting, to be honest with you. It actually has some good growth, especially before all of this happened. But either way, it has, for a while anyways, a very, very straight upwards line. And then, of course, COVID happened. It had a double bottom like everything else. It's recovered, and now it's starting to trade a bit sideways. So it's going to be really interesting to see what happens coming out of this sideways action. But generally speaking, this stock was on a growth trajectory before this COVID crisis that happened, and since the recovery, it's actually recovered quite nicely. So it still hasn't reached its top 40 yet, but it should be coming hopefully pretty soon, in my opinion. And even though it hasn't recovered fully just as of yet, it is something to look at because their dividend is still paying, and when we start looking at stuff like the dividends, well, we can just collect the dividends while we wait for the stock to recover. The other thing I really do like about it is they do increase their dividend. Now, it's not massive increases, but they do increase their dividend over time, and they just recently increased their dividend once again, so that's really good in my books. I really like to look at their financials and earnings too, and when I start looking at their earnings, they had 2 missed quarters, 1 beat quarter, and a quarter where they met expectations. So don't expect any massive growth when we start looking at these earnings. However, when we start looking at the revenue, they do increase their revenue quite steadily year over year over year. And they usually have increased earnings as well, other than 2020. But when it really comes down to it, a lot of companies had issues in 2020. For them to have positive earnings in my books is a good thing. Next is Kraft Heinz, and this is the one that's always confusing me why Warren Buffett even invests in them. Now, back in the day, Kraft Heinz, KHC, was a fantastic company to invest in, but over the last 5 years, it's actually kind of curious why he's still in it. They do pay a high dividend of 4.23%, and they have high volume as well. Kraft is obviously a play on the food market. However, there are better sectors, in my opinion, to be in. They were steadily decreasing before the pandemic. They went down again, just like everyone else during the pandemic, and they really haven't recovered at all. Like, they've just been trading sideways since then. Considering the downwards trajectory before, and of course the sideways trading since, this is a stock that I personally would not be in. They've also lowered their dividend as well, and they lowered it before the pandemic, which just, again, makes me to believe that this is not a company that's going through great times. Now, if you're looking at companies that may have a good turnaround story, Kraft is literally one of those companies. They are a massive, massive company. They have everyone eats mac and cheese, but they are a massive company, and it's kind of interesting how they're going through these hard times. They're still paying a dividend. They did lower a dividend. It's just not something if I'm going to invest in a company myself, if they're going to pay a dividend, they have to be increasing their stock price as well. Now, this is 2020. I know the bottom part of this chart's off the page. But when we start looking at their financials, they are pretty much going sideways in their revenue. They're not increasing their revenue at all. They are actually decreasing their earnings, which is something that I personally don't like to see. They have beat 3 quarters in a row, which is very nice to see. Maybe that shows for a good future, but they need to get innovative. They need to figure out what can make their stuff sell more. Next is Verizon, and obviously you probably have seen my older videos where I'm very negative against any telecommunications company. Verizon is obviously good when it comes to dividends. They're 4.9%, but I really think that the whole telecommunications industry is going to get just absolutely demolished. Obviously, there's a lot of government spending getting thrown at these companies because they want to expand 5G. They want to expand all their networks nationwide out into areas where they just don't have internet right now. But there's a negative side to this, which is the governments and these companies are going to be just dropping billions of dollars into that issue where they're trying to expand 5G and expand internet everywhere throughout the United States. But when we start really looking at it, you can get just as fast of internet with Starlink, and that is currently expanding as well. And Starlink is, of course, satellite internet. That is pretty darn strong. And then if we really look at the future aspects of Starlink, and when we look at companies like SpaceX, they want to eventually branch off Starlink into an actually publicly traded company. There are so many opportunities for Starlink that I think companies like Verizon, Rogers in Canada, Bell in Canada, all of these telecommunications companies are going to have massive issues because obviously landline internet is going to be a thing of the past when we get more and more of these Starlink satellites into the sky, especially in rural areas. But also when it comes to internet, when it comes to these phones, they need towers. Obviously you can't have a satellite dish in your phone. However, the Starlink system is crazy in my mind, the potential, because Elon Musk could put up a tower in your area, rent somebody's land, and put up a tower in your area. Not even have to hook up to a power source and don't even have to pay electrical bills because they have Tesla solar panels to be able to get their power. And then they can obviously then use the satellite internet. They don't have to rely on the power lines working. A storm could go through, and as long as the tower is still there, they're fine. And they're working off of a satellite signal off of a solar panel. Start getting what I'm saying? Start hearing, like, these guys are in trouble. But they do pay a pretty good dividend, at least right now, and they have ridiculous volume. 17 million shares. You're not going to have to worry about buying like 1,000 shares of this and saying, oh, I have to wait for it to buy through. 1,000 shares versus a 17 million average is nothing. You're going to be able to get in and out of this very easily. Over 5 years, we did see, of course, during the pandemic, it never really got hit. We can see it did get hit for like maybe a week or two, but other than that, it recovered right away, and now it's starting to decline once again. This is a very choppy stock to be able to be in. You would be in this if you're just getting the dividend. It wouldn't be a company that I would personally invest long term in. I think that the whole telecommunication space is going to get disrupted massively because there's many different companies that are looking to do exactly what SpaceX is doing with their satellite system, and there's already SpaceX being the first in the market. So when it comes down to it, there's going to be a lot of disruptions for telecommunications companies when it comes to landline internet and potentially even cell phone internet plans. They're in Canada, for me to get a simple cheap plan is $80, and that's not a pay as you go type thing, but it's a non-contract bill and it's $80 a month. If these guys come in cheaper because they can and not have to throw in wires everywhere to be able to run their systems, it's going to disrupt everybody. From there, we do see that they have increased dividends about once a year, which is nice to see. It's not massive increases, but they are increasing them. When it comes to their earnings, they've had 4 beat quarters, which is great. They are not growing their revenue at all. It's pretty much trading sideways with lesser earnings because, of course, they're trying to expand into new network areas, trying to expand 5G. It's going to cost money, and I think that's going to be the ultimate downturn of companies like Verizon, Rogers, Bell, TELUS, all of them. AbbVie is another big dividend payer that Warren Buffett holds. It's 4.8% right now. Again, great volume. It's very, very good, strong company. And PE ratio is kind of average when you're talking about other companies in the same, I guess you could say, niche as AbbVie. Again, very choppy stock. It's trading near the top where it was at again in 2018, but before the pandemic it was falling, and then since the pandemic it's been rising. So is this a true rise on their business, or is this just rising in the fact that the whole stock market is rising? That's something that we also have to kind of pay attention to when we're looking at some of these stocks. Now that they pay a 4.8% dividend, it's a good dividend paying stock. You can rely on it. It's a strong company, but this downturn before COVID kind of makes me worried. Now, when I'm talking about dividend stocks, only invest in dividend stocks that have a strong chart, but also the ability to raise dividends, and they do raise dividends. Since 2017, which is about 4 years ago, they've basically more than doubled their dividends. So that's a fantastic dividend history, in my opinion. And when we look at their earnings, they've had 4 beat quarters, which is fantastic, and they are growing their revenue with lesser earnings, which is kind of curious. But at the same time, revenue is king, and when you keep on getting more revenue, earnings will eventually come along with it. So it's still, in my opinion, this is a fantastic company to invest in. The chart just kind of makes me worried. Chevron, now I'm very high on oil stocks right now. I don't think oil is going to be dropping anytime soon. We all know Biden cut off a lot of the oil producers in the United States because they were on government-owned land. And when that happened, they started basically transitioning over to needing the Saudi oil, which is why oil prices have recently just spiked to crazy levels. And when gas is this expensive, Chevron's going to be hit because there's going to be lesser and lesser people looking to drive their cars. They may be investing in electric vehicles. Electric vehicles is also the future. So from there, it is an interesting company to invest in. I'm really high on oil stocks right now, or even gas companies, just anything in that sector altogether, because they're making a killing on this oil. But at the same point in time, if the Saudis decide to maybe mine more oil or get more oil, then these stocks will get hit again. So you really have to time this right. Right now, oil and gas is at a very high level. Will it continue? Will it continue to rise? We'll just have to see. But it is something that if you ever invest in miners, in my opinion, whether it's gold, silver, oil, whatever, you really have to watch that market very closely to get in and out when you need to get in and out. They do pay 4.67% with 10 million shares on average. This is, again, another one of those stocks that are very easy to get in and out of. Before COVID, they were trading pretty much sideways, so it was a great dividend play with no real growth. They dropped because, of course, oil went essentially negative, and then they've recovered since. They're not to the all-time high yet, so they could run up to 130 or even higher if oil continues to go where it's going. However, considering it's near the top right now, if it has a little bit of a pullback, 5% or so, it might be a good company to get into right now. And they do increase their dividend, and I have seen many different articles that they want to continue to raise their dividends as well. They want to know they want to put their money in their dividends essentially, and that is what they're doing. We can see that they've had 1 missed quarter, 2 beats, and 1 in line. So overall, they're essentially hitting what the market is expecting. Obviously, this recent beat is mainly because oil's gone to ridiculous levels. Now, oil did have a negative price. That's why, of course, most likely 2020 wasn't exactly a great year. Or even 2019, the last month or so of 2019 was when COVID was really starting to make headlines, at least in the conspiracy side of the internet. And I would say that could be potentially why there, but that is kind of concerning with 2019. 2020 was a bad year. If they can get back to revenue growth, that's going to be fantastic. So those are the highest paying dividend stocks, or at least some of the highest paying dividend stocks that Warren Buffett owns, with a little bit of my own thoughts to his investments. Obviously, he must be smart in some way because he makes billions and billions of dollars. So I'm not hitting his decisions on stocks. I'm just saying right now, he invested in these stocks many, many years ago. So he's probably getting a heck of a lot more than a 4% dividend because he's probably been holding some of these as much as 20 or even 30 years. And when you're really looking at that, for example, that one stock that we looked at doubled over 4 years, their dividend. Think about if you held that for 20 or 30 years. He's probably making what his original investment is over and over and over again every year by this point. So when you're invested in a company that long and you've already made that initial investment back in dividends, it doesn't necessarily matter where that stock's price is going to go. You're going to continue to get that maybe 80 or 90% dividend from the initial investment that it doesn't necessarily matter that you still hold on to it at that point. Anyways, these are my thoughts and the reasons why Warren Buffett still holds on to these stocks. I hope that you've enjoyed. This was not a hit on Warren Buffett. I think he is the greatest investor of all time, and definitely go check out one of his books down in the description below. I'll see you guys again next time.